G'day everyone, welcome back to Pete's Investing. Today's June 24, 2023, the Euro US dollar currency update. We're broken up into a bullish momentum on our weekly, bullish on our daily, and just bullish on our hourly as well, although we did have a divergence on the hourly and that hit our target, and now it's making further upsides. I'll cover that in a minute. First off, on the weekly, our triple moving average of the price chart, the moving average of the CCI 150 and our oscillator are showing bullish momentum, so primarily bullish trades based on the trend of the weekly. On the daily, likewise, that indicator is showing a bullish momentum. We did have a bearish divergence here, and that's still in play. It's a bit hard to see there, but if I expand that, you can see there very clearly there's a bearish divergence on the CCI. That aligns with the bullish divergence here on the price chart. Now we did draw a target area here, and that was based on that wider Fibonacci range. It came down and did break below the channel, which is our entry point, and we're going to keep that in play. Now for this divergence to fail, we need to see the CCI break above that point there. So if I expand that again, we need to see the CCI break higher than that point there. That's at the invalidation point. So if the CCI breaks higher than that, then the divergence fails. So far it's still in place. So even if you entered it at that point there, which was our lowest point below the channel, drawn there in our divergence range, that is your entry point. Now the price is retraced to the upside, so no panic. We hold on to that until this divergence fails. Now, and at this point, we've got a target area here between the 38% and the 50%. So we're going to keep that open as our target area if this trade continues to the downside. On the hourly, you can see here we've got another divergence that actually worked. We had a bearish divergence on the CCI versus a bullish divergence on the price chart. And there was a smaller divergence, just very quickly, there was a smaller divergence which played out there. Bearish, bullish, it broke out below that channel. You would have gone short there, and it would have hit our target area in that little range there. And I won't draw the Fibonacci, but you can draw a Fibonacci between either that low or that recent low as well up to that high, and that would have been your target area on that one. Now since then, it actually, in fact, even if you held on to it, it would have broken in that target area a couple of times there, once there, and there. But anyway, we've got another bearish divergence playing out now between those lows on those highs on the CCI versus those highs on the price chart. We drew a channel in that divergence range, and it broke below the channel there. That would have been a nice area to go short, and our target area was drawn between the 38% and the 50%, hence that little box, and it hit it quite nicely. Now it's making a bit of a retrace to the upside again. So that worked out as a successful divergence trade. Now, again, if you're new to the channel, we look at those divergences as little plays on their own, independent of the weekly or daily trend. But what we've got up here is a bearish backtest and a bullish backtest. And the way you trade those is as I said, when the weekly and the daily are aligned, long or short, you take the trades on the hourly time frame. So to understand how to trade that with and other trading strategies, subscribe to my Patreon page, where we also look at weekly scans of stocks, currencies and commodities. Subscribe, like and share the channel. Thanks for watching, and see you in a future video.